Yo, what is up, dudes and dudettes? This is Due Diligence here, and I know a lot of you are really upset today because the market isn't doing so well. But if we go back and look at our bread and butter MMAT, which is metamaterial, today we're gonna go back and talk about metamaterial a little bit. As we all know that GP, the CEO of metamaterial, start buying shares. Well, technically, it's really exercising options, and he did a sneaky swap of options. We're going to talk about that in the next video about MMAT. We're going to do a very in-depth analysis on the Form 4 on the SEC Edgar system. And we're going to calculate how much exactly is the real cost basis for George and on how much shares he's actually leveraging against and off of the market, and the reason behind why he did what he did, and what does it mean for us moving forward as retail investors. But in this video, we're just going to talk about the general trend or general prediction or our general belief of where metamaterial is going to go. So the reason why metamaterial went down so much in the past few weeks or past few trading days, which is probably half a month of trading days, is because we have a new virus coming, right? I know COVID is old news, but COVID has a drastic effect on small cap stocks. We also did a data analysis on a COVID's impact on small cap stock. The COVID impact on small cap stock, especially during a day where the market is going down, then going downward trending than ever, it has a leverage, which means it has an exponential effect on small stocks, the stock cap stocks. And when you double that with the new taper tantrum, which taper actually is, as we speak, is actually happening, that also have an exponential effect on small cap stocks. Therefore, it is actually normal to see the drawdown effect that we see over the past few weeks. And normally, in big institutions, they will tell their traders or tell their investors to deviate from small cap stocks and start trading Apple and trading all these good big blue chip stocks that might not see a supply chain shock or might not leveraging that or might not have any relationship to interest rate hikes because their business are really diversified and their cash flows are basically rather stable. So if you're trading the bigger name stocks, what you really need to worry about is how much of upward foam or bubble was created by momentum, and all of that is going to get trimmed away, and then that stock will go back down to a fair value and people start piling up, and you will see a further run of those big stocks. But a lot of you don't have a lot of money to trade options or to trade physical shares on big blue chip stocks. So what we're going to default back to is small cap stocks. The very interesting thing about small cap stocks is small cap stocks usually have twice the amount of volatility than the big name stocks. So what does it mean is the harder it drops, the harder it goes back up. And in terms of MMAT, because of the previous analysis we did on this company, we, I think last week somewhere, we talked about it. It has a probability of dropping down to $3.3, and it have a slightly lower, actually very low probability of dropping down to $2.8. When it actually dropped down to $2.8, it's probably time to take out some dry powder and start buying the $3 leap options, right? And coming into this week, we have George buying more shares. Or we're just gonna say buying more shares, but really what he's doing is he actually did a very sneaky executive plan, exercising plan that actually by buying more shares, he actually exponentially lowering his average on his stock holdings. But the thing is, what he's actually doing is actually not helping with the stock short term. It will probably benefit the stock in the long term, but in the short term, it doesn't matter at all. So what we really wanna analyze here is MMAT on the short term, on the medium term, and on the long term. In the long term, MMAT will probably go back to $5. And we will support that thesis in the next video by analyzing George's plan or George's entire holding or whatever and his patterns, right? And then in a medium term, it will probably, when the NASDAQ and recovery stocks started to rebound, it will probably follow that too, because meme stocks and AMC and GME is in a category of recovery stock, basically. The reason why people are into meme stocks is because they think that I mean, deep down, what they know is, okay, like, we're literally overvaluing the stock so much, we're basically piling up the valuation. But the underlying thesis there is they don't actually think COVID is going to be that bad. So if you're actually buying AMC, GME, and all of these meme stocks, what you really are doing is not you believe in the cause. Well, some of you might, but deep down, the logical solution or the logical understanding or the logical explanation for that is you believe in the recovery is going to happen sooner than later. That means you don't think that COVID is the scare of COVID is actually that concrete. That means a huge portion of the COVID scare is actually not rational. Then what does it mean for us as MMAT investor is right now you see MMAT at $3.3. It's significantly lower than its enterprise value. Well, actually, it's not really significantly lower. It's just basically almost at fair value. Because if you really go back to their books, you will see that they have about $70 million in goodwill, and I tend to discount that. So if we minus that part and we, divide it by all the shares that they have on the market, around $3 is where fair value is at. But small cap stocks usually traded on a multiple of their fair value because we have a lot of retail investors. Therefore, we use the reverse logic. We realize that the actual price target in the medium or the short term is probably $3.8. And when it reaches $3.8, we can actually go back to where they acquired Nanotech. And then when Nanotech's value is added, its actual fair value price in terms of the market expectation is about $4.8. So again, it's actually probably be good if you start buying, leap options, 3 months call options, 6 months call options, and everything. And again, like the general market moving down momentum is gonna probably be very temporary. Consider the taper effects is probably gonna get close to its end around March, and then we will probably know the beginning of next year, around like the middle of January, we will already know when possibly the interest rate hike is going to happen, depending on how natural gas and oil trade during the winter, because that's when a lot of volatilities are happening. And since MMAT tends to actually have a positive correlation with an oil on a day when oil is downward trending, and it will have a random correlation with oil when it's upward trending, that means what we need to really figure out in here for MMAT is when the oil is going down and MMAT is going down and general market is going down to a greater extent, it's actually a really good buying point. So the conclusion of this video is right now MMAT started entering the buying zone here, and when it actually go down to $2.8, it's probably a good idea to buy long-term call options at $3, and you probably will see a profit in about the longest, the safe estimation of the time period is probably a month. You'll probably see a profit if you buy in at 2.8 when it goes down to 4.8 and start buying call options at $3. If your expiration date is 3 months ahead, you probably will see a profit around 1 month and about 1.2 months. Actually 1.5 months, sorry. And the shortest the amount of time that you will see a profit will actually be the next day in the next 3 days. Well, anyways, this is for this video. Keep healthy. Make sure that you don't really go to public places, because apparently the new variant is very contagious, even though the symptoms are really mild. So yeah, keep safe, carry on, keep calm and carry on. If you like those kind of videos, smash a like button and subscribe. See you guys on the upside.